to a special edition of Rush Hour where we discuss not just one but the two important news of the day. Yes, crude has fell below $65 barrel, and to react on the news of China imposing retaliatory tariffs of 34% on United States. But before we get into detail, let's take a look how US markets are actually reacting to it, which has just opened. I can see that Dow Jones have opened close to 2.5% down, and this is apart from the fall which has happened yesterday. You can see S&P 500 is down 2.5% and even Nasdaq falling close to 3% in the start of the trade. We have with us important guests to discuss about the China's retaliatory tariffs as well as crude falling below 65 mark. Now shifting focus to crude, then Brent crude fell about 8% to slide below $65 per barrel mark for the first time since August 2021, and in fact crude prices are set to close the week at the lowest level since COVID-19 peak. Now this decline comes after OPEC decided to hike its oil output in May, and remember that Trump's tariff policies also impacted the oil sell-off. And speaking of tariff, China announced an extra 34% duties on US goods, which will take into effect from 10th of April. This comes after Trump slammed China with the 34% duties, and this is in addition to pre-announced 20% tariff which was already in place. To discuss the impact of this, we have with us Dr. Vivek Mishra, who is Deputy Director Strategic Studies Program at ORF. We have Farah Murad, Senior Market Analyst at Equity Group, and Pulkit Agarwal, Head of India Content at S&P Global Commodity Insights. Welcome to this special discussion. First, I would want to come to you, Vivek, because you have seen the reaction which has come in market. Do you think this will get prolonged further?
Oh, absolutely. I mean, if you look at the US and China, they're entangled in a fundamental trade war. Starting from the Trump first administration, there's, the US administration has stepped on the gas, which means each successive administration has carried over the steps in trade war from the earlier administration. And we are just seeing a full-blown trade war, which is likely. So I think the markets are in a real soup. It will be quite a few months before they stabilize, because supply chains will make their own reassessments about where the chips may fall. But particularly if you look at the US tariffs, they have targeted these pit stops of China's Belt and Road Initiative. You look at Vietnam, look at Cambodia, look at Kazakhstan, which is outside the US purview mostly in terms of trade. And so you ask the question on why they have been targeted that much. It's simply because they are a major junction for the Belt and Road Initiative. So I think all in all, you're going to see a great degree of volatility going forward. And also the US, today's announcements by China show that they're fully retaliatory in their steps. And I think if you look at if you break down the China's steps, some of the China's steps that today has been announced, the US steps have been conciliatory in some areas, like semiconductors have been left out of the tariff, while Chinese steps are actually not leaving out most sectors that China exports to the United States in. So it's a grave time indeed.
I want to come to you to understand the fact that is it only the trade tensions which is actually pushing crude down? Pulkit, can you hear me?
Oh, hi.
Yeah.
Thank you. See, it's about trade tensions that's pushing down. Of course, that's a big sentimental factor that has changed in the last 2 days in terms of why crude oil prices are going down. But what happened with OPEC Plus last night was they carried out the plans that they already had in mind, and they were unfazed by the crude oil prices going near to 70 and going down below 70 also slightly before their meeting. So it tells the market that they're not too worried about the sentimental moves of the market, and they will continue to sort of take care of their plans that they always had in mind in terms of hiking the oil production that they wanted to. So that's one factor. See, fundamentally, crude oil markets are in excess. They remain in excess, and it's a fundamentally weak markets right now. At least in the first half of the year. Second half of the year, also slightly, slightly bearish in terms of the sentiments, the fundamental sentiments. But what's happening, with the trade side of things, right now, all the fundamentals of the market is kind of out of the window. So the big moves that we are seeing in the oil markets for the last 2 days is much more about these trade sentiments rather than pure play fundamentals.
It is more of a sentimental, but one important thing which our viewers would want to understand, crude has been falling off late. It is not just last 2 days, but if you take average of last 1 month, it is on a declining trend. Now I want to understand that there was an anticipation of our petrol and diesel prices to fall after this crude fall, which has not happened. There has been presentations which has been given to government. How does that math actually work out? Do you see Pulkit, and I would want to come to you, Farah, first on this, and then I'll come to Pulkit to answer the same question. Farah?
So you have a point in highlighting that. We've seen the fundamentals. It's not really supporting oil market as you guys were discussing. But the main thing I think we need to take into consideration, yes, it's a fundamentally weak market. The outlook for demand, the growth outlook, they're even now under more pressure than before. The tariffs added another layer. But what I can say, this shift, this pivot point is what happened yesterday. So OPEC Plus, for a decade, the main role they played in the oil market, I would say, to stabilize, but also keep prices high. So we knew their outlook for the year wasn't the best. They even decreased the outlook for the second half of the year. And yesterday, we were expecting at least a reminder of maybe to stick to the production limits to some countries that were not really maybe respecting this limit. But when it comes to what happened yesterday, they exceeded the production by 3 times. Is it a punishment for these countries that were not respecting the limit? Will it have a short-term effect until everyone gets back in the alignment? I'm not really sure yet, and that's probably why it will either continue the volatility in the market, or it's, I would say, a tough stance to bring back alignment. So as was discussed even before, yes, the outlook, the fundamentals are weak, but I think OPEC Plus has the superficial, also strong effect on the market, and they're playing their card right now with what happened yesterday. It's a clear pivot point than what we used to hear from OPEC, from the organization that wanted stability and high prices.
Right, while
market.
Crude is definitely a factor, but I want to highlight one important breaking news which is there on the screen of your channel. Dow Jones is on course to confirmed correction, down 10% from record closing high. If you talk about the mega stocks on Wall Street, they have fallen after China has announced 34% import tariffs on US goods. Ever since markets have opened, they are down more than 2.5%, whether you talk about Dow Jones, S&P 500, NASDAQ. In fact, NASDAQ is now touching 3%. Nvidia has fallen close to 3.5%. Alphabet is down 1%. Apple has lost more than 3.4%. Similarly, Microsoft is also down 1.9%. So after US announcing reciprocal tariffs, China has announced 34% tariffs today, and US markets on a second day consecutively, you have seen the big fall which is coming in. Breaking news on your screen that Dow is on the course of correction. Now it is down 10% from record closing high. You can see on screen that Meta Platforms is down 3.8%. Amazon.com has also fallen close to 5%. And apart from crude, which is slipped below $65 per barrel. You have seen the reaction which is coming in from US now. I would also request a hotboard on the other Asian markets who has fallen today apart from India. Now clear cut Q coming in from US markets with US falling close to 3%, whether you talk about Dow Jones, whether you talk about S&P 500 or Nasdaq, all are close to 3% down. Getting back to discussion, Vivek, I want to understand now next week when India will take a cue and other Asian markets will also react to Dow Jones and Nasdaq, what do you think will be the situation of Asian markets? And also, if I can have a word on US, because the most impact has been there on US after the announcement of tariffs.
Let me start with the US. I think there's going to be a tremendous increase in prices in the near term. There's been various studies as to at least a 0.8 of the US GDP being wiped out in the longer term, but we'll have to wait and see. There's been a mixed bag approach in terms of economists approaching this idea. But there's certainly in the shorter term, you're going to see market crashes, increase in prices within the domestic US, and as a result of that, the US taxpayers paying more per household. That's for the US. I think externally we are going to see. I don't see either China or the US backing off from these announcements. I think there's going to be a restructuring of supply chains, particularly in Southeast Asia, because essentially Southeast Asia is also in the crosshairs of Donald Trump, and China would look to strike certain bilateral deals or a regional deal in the region to be able to overcome some of these circumstances. And I think if you look at the recent US, if you look at US, the China, Japan, and South Korea deal to counter the US tariff, I think that's just one template on how countries can come together in the region and do certain, come up with certain ways to navigate these problems. I think in South Asia and in the global South and the Indo-Pacific, you would see more countries and unions looking towards India. You already saw preempting from Europe, one of the largest delegations by Ursula von der Leyen, the European Commission president, to India to basically talk about markets, and a host of other countries reaching to India to strike a FTA or a low-hanging fruit deal. And I think India will have its own challenges in terms of navigating the 27% that has been imposed on Indian exports to the US. And I think one of the most critical sectors to be impacted there is the components of automobiles. I think that's a sector to look out for.
But as far as the US markets are concerned, I just want to highlight few of the stocks. DuPont has fallen more than 12%. If you talk about the consumption stocks, Foot Locker is down close to 6.5%. So the idea, the anticipation from US was that it was a Liberation Day. It will help economy of United States, but markets have a different reaction. Not just one day, but second consecutive day, you have seen the broader indices which is falling 3% each in US. You talk about Dow Jones, you talk about S&P 500, all are down close to 3%. In stocks, if you talk about American Express, it's down 3.8%, MasterCard has fallen 2.1%, Ford is also down 3%, General Motors is down close to 4%. If you see the initial reaction which is there in the US market. Now shifting back focus to crude also, which is on a sliding path. I want to understand from you, Pulkit, we were talking about India reaction to it. There has been some conversation in the past regarding reduction in the prices of petrol and diesel. What do you think this scenario will actually change for India?
I think I won't comment on the sort of wind of or the direction of wind of where petrol and diesel prices in India might turn out to be, but something to something to consider for policymakers, something to consider for public at large, that this is a sharp move for oil, and if it's a lasting move or not, that is still to be seen. These are sort of days of sharp reaction that has happened in the past 2 days. oil markets does, we have seen in the past, the anecdotal evidence does suggest that, sometimes markets like oil does react quite sharply, and then, fundamentals do catch up sometimes. Fundamentals are weak, but not, not so weak to perhaps, take the oil markets down by about $8 per barrel in the last 35 hours or so that has happened right now. But that point aside, I think it's a point for policymakers to consider, in terms of how volatile the markets might be. But something on the level of, sort of retaliation, so to say, that China has done. Perhaps something to consider, while US did keep out energy from their tariffs, but China has not, right? So China has, in their retaliatory tariff against US, they have included, crude oil and LPG, which they do import quite a lot. LPG especially, they do import quite a lot. So there's going to be, certainly a major, or, somewhat a major energy flow implication also directly, on account of Chinese retaliatory tariff. So yeah, that's again a very interesting, development that the oil markets and the energy markets overall will see. LNG, again, China is a buyer of US LNG, and, again, it's being impacted. So interesting days for the market, not just for price levels, but also how the global flow picture does shape up.
Right, Pulkit. Thank you so much, Farah, Pulkit, as well as Vivek, for joining in this discussion. Due to paucity of time, we have to conclude here. But